Welcome to Simply BSI or Simply Budget, Save, and Invest. Today, I'm just going to give a quick portfolio update and go over some of my positions and also go over some trades that I closed last Friday or last week ending 1/16/2026. Again, this is going to be a channel dedicated towards helping myself maintain consistency and track my goals. Hopefully, by doing so, I can also help some of you all and also get pointers and suggestions from you all to help me improve my strategy. But in short, my strategy is basically the wheel strategy. I primarily continuously sell covered calls and cash secured puts. In this account specifically, I do have some long-term hold positions as well, but I do also end up selling covered calls against them. So again, with that strategy, you don't end up holding stocks for too long, depending on, of course, how aggressive you are with the covered calls, of which I am very aggressive. So long as I sell at a strike higher than my cost basis, I am happy to sell at a strike like $1 higher than my cost basis. But we'll save that for another video. I'll go into it for all of those who aren't familiar with the wheel strategy or selling calls or selling options. I'll create another video, do another video for that and explaining it in depth. But for now, let's just go over my positions and some of the open options I have currently that I've sold for the week. So right now we can see I sold a Netflix $84 put, which is one of the positions I'll focus on today. Of course, given that Netflix had their earnings after close, of which they did report a beat, but the price of Netflix did not respond positively. So right now, I think we're down about 4 or 5% in Netflix. Let me actually pull it up for you all, which is unfortunate. But again, it was a bet. Truthfully, I did anticipate Netflix, of course, gapping up after earnings, which unfortunately did not happen. Right now, as you can see, we're down 5.76%. in Netflix. Let's give it a second here to load. Again, this is as a result of their earnings. I did listen to a bit of the earnings call as well. They did just go over a bunch of their the shows they're releasing, different strategies for the new year, and it just seemed like everything was pretty good. And again, they did report a beat too, so it might just be a reaction to the micro environment. Who knows? But yeah, Netflix did not respond great to their earnings. But as you can see right now, I did, and this was today, I sold a Netflix $84 put expiring this Friday. And right now we're right below around $83 at $82.91. Again, in short, for those who don't know, when you sell a put, this is a cash secured put. You have to have the cash available to buy 100 shares at whatever strike you sold the put at. So in this case, I sold an $84 put. The collateral is $8,400, and that just means come expiration, if Netflix is below $84, I'll have to buy 100 shares of Netflix at $84. With that being said, if Netflix closes above $84 on Friday, that's Friday, January 23rd, then I just collect the premium. In this case, I sold this put for $2.58, I believe. Or maybe less than that, maybe $1.50. So in that, essentially, I would receive $150 if this option expires worthless without me having to purchase the underlying security, without me having to purchase Netflix. Otherwise, again, I will have to purchase Netflix. The way Robinhood does it is they'll allocate that premium toward my purchase. So that'll take $1.50 off of every share. So I'll end up purchasing shares of Netflix at $82.50. So in my eyes, so long as Netflix closes above $82.50 come Friday, worst case scenario, I can just turn around and sell an $84 covered call for next Friday, collect that premium, and just keep rinsing and repeating that same action until I get assigned. So again, for those of you who are familiar with the wheel strategy, you'll know exactly what I'm talking about. For those of you who aren't, I'll post another video kind of going in depth. And of course, feel free to leave comments or do your own research as well. There's plenty of resources out there that'll explain it in depth. But let's just go back to my open positions currently. So Again, I have a bunch of covered calls, a few cash secured puts, SMCI. So this is a data center play, and actually one of the technical plays, and a few other YouTubers I follow mentioned SMCI. So I decided to take the plunge when it was trading below $30. I think I got it for about $28. I can actually see it here. You can see my cost basis here. So I purchased SMCI, I think around like $28 and some change. Sorry, it's taking forever for this website to load, but you can see my average cost basis is $28.28. I just sold a covered call for $33 at the strike of $33 expiring Friday. So again, we're saying here, if SMCI closes above $33, I am obligated to sell my shares at the price of $33, regardless of what price it closes above, or regardless of what price it's at, so long as it's above $33. So again, if it's at $35, $36, I'll still have to sell my shares at $33. If it's below $33, I just collect that premium and I keep my shares. So again, same premise of the cash secured put, just the opposite. Instead of purchasing the shares, you're selling the shares you already own at that strike. So again, I have a SMCI covered call expiring January 23rd. This is this Friday. And then again, I have another cash secured put for SMR. That's at $19. I believe that's trading around $19 right now. So there's a good chance I might get assigned on that. I have an Amazon call as well. Amazon's one of my long-term plays. I do have the shares here as well with a cost basis of $231.99. So I'm selling those calls. I sold it at, actually, I'm sorry, that's not the cost basis. That is actually the price it's trading at right now. I think my cost basis is around $238. But again, so long as I'm selling a covered call at a strike above my cost basis, you'll always make money. Again, so it's that, think of it that way. And ETH, big believer in Ethereum. Again, with the movement to tokenization, I think Ethereum's ERAC layer is going to be utilized for tokenization primarily. So I do have shares of ETH that tracks, again, it's a spot ETF that tracks the spot of Ethereum. I also have that tracks the price of Ethereum. I also have IBIT that does the same thing for Bitcoin. So I'm going to have a covered call on that. These positions I am down. It does not show my cost basis. I'm gonna have to change that eventually, but these are my positions here. You can see I have 100 shares of Amazon, Robinhood, IBIT, ETH, Sound, and SMCI. I do want to get out of most of these positions. I want to get out of SMCI, Sound, SoundHound AI, and IBIT. Those are the three I want to get out of. ETH, Robinhood, and Amazon I want to hold as long as I can. And I also want to add Google to this position, Google as well as Netflix I want to hold long term as well. So I won't be too mad if I get assigned on Netflix. So that's going to be the positions in Robinhood. And let's go over to my IRA accounts or retirement accounts. Again, I mentioned I have a small Roth. You can see here we have shares of ETH and Sound, as well as my rollover IRA, which I have shares of BMNR. It's another Ethereum play. Robinhood as well. And we have a few options. So I have, let's take a look at the rollovers. So we can take a look at these. But I'm selling covered calls against both my positions in BMNR and Robinhood. So you'll see here, I have the covered call for 120. Again, that's above my cost basis. So I'm going to continuously sell weekly covered calls just to collect that premium. And I also have a covered call for BMNR. Again, $35 above my current cost basis. So in both those scenarios, in the event I get assigned, I'll make money because, again, I'll make the money from the difference of my cost basis and the strike, which is the realized gain. And then I'll make money from the premium I collect from selling that contract. And next we have the Robinhood put. Again, my theory, I want to hold Robinhood long term. So I'm okay purchasing more shares at a lower price than I have previously. So right now, my strike, or rather my cost basis is around $118.50. I'm happy to purchase Robinhood at the price it is now, which is actually $105. But obviously, I sold this put way before, or I think this was like a week ago. Right now, Robinhood's trading at $105. So again, I could have gotten the shares cheaper, but I'm not so mad about if I get assigned on this because again, it's going to be a long-term hold anyways. So in the event I do get assigned, I'll just turn right back around and just sell $115 covered calls on Robinhood, in addition to keep selling the $120 covered call. And then again, we have Netflix. Again, I bet heavily on Netflix doing well in earnings, but I did lose that bet. So I am likely going to get assigned. But again, I do have until the 30th in this one, whereas my individual brokerage account, I sold a put expiring this Friday. In this case, I sold a put expiring next Friday for a higher strike as well. So for $86 in this case. So again, that was under the impression that the price of Netflix would rise after the earnings. It did not. So again, I could have gotten these shares cheaper, but not super mad about it because this is a stock I'm willing to hold for the long term anyways. So with that being said, I also have a options income tracker. You can see the title or thumbnail of this video shows my weekly income for the week ending 1/16. So I just want to go into details about how I was able to generate $652.26 for during last week. And this is a great way, an Excel sheet I just used to track my income from options premium. So in this case, my individual brokerage account, I sold 3 calls and sold 2 puts. So you can see here, I sold an Amazon call at the 260 strike and earned $50 a premium. I sold a Robinhood covered call at $140 strike and earned $25 a premium. I sold an SMR put at a $19 strike and earned $92 a premium. A Sound covered call at the $12.50 strike and earned $35. And then an iBit put at the $50 strike and earned $50. And these actually all expired worthless, so meaning I did not have to sell my shares or purchase shares, depending on whether it's a call or a put. So I just collected this premium for this week. So in my individual brokerage account, specifically, I collected $252 for the week ending January 16th. And then my traditional account, I got a little more aggressive, have a bit more premium. So I sold 2 puts and 1 covered call. The put being an SMR put at the strike of $19, so collected $92 of premium there. I sold a BMNR put at the strike of $30 and collected $110 there. And then lastly, a hood covered call at $120 and collected $200 there. So give or take fees, I collected $402 in premium option income last week in my traditional account, all of which these contracts expired worthless. So again, didn't have to purchase shares or sell my shares, depending on which option. But just wanted to go into my current positions. Next week, I'll go more into depth of what my thinking is, my strategy. Again, in short, it's a real strategy. So you're just continuously selling cash secured puts and covered calls. In this case, again, I'm following it, but just really only doing it for stocks I'm willing to hold long term. That way, I'm not totally upset if I do get assigned at on a cash secured put at a price a lot higher than I could have gotten the shares, and also not totally upset if I get assigned on a covered call at a price I could have sold the shares for more. So again, it just depends on where you're at. But please, guys, let me know if you have any questions or if you have any pointers, suggestions, or want me to explain in greater depth. I'm always happy to do so. But again, just wanted to get a video out there, kind of give you guys an update on my portfolio and let you know where I am currently. But thanks again, guys, for taking the time to listen. Just, like, subscribe, all the things. And, of course, we'll get better with these videos as we keep going. But thank you all. Have a good night.